Keep watching as I show you how I added $2,500 to my $5,000 trading account in under a week. Hello, it's Darren here at Safety in the Market, and welcome to our July trade, where we take you through what our students have been working on through July. And this month we're going to look at a euro long trade that we looked at, watched, set up, and then used an intraday entry to get involved. I certainly took this trade, and some of our students would have paper traded it, I'm sure. And here's our setup. So like I said, we're looking at the euro up against the US dollar. This is a daily chart here, and we were watching this market rise from mid-May all the way through to the end of June. And as it approached this top and made its top, we were starting to use its range up to think about where it would retrace to next. We used this old top, we used the previous range down, and then we certainly used this area here and its smaller ranges to give us a trading window from about 115.42 to 115.75. And then as we got closer, and after using these ranges, we looked at our intraday charts. They give us another indication as we get closer and closer to our trading window of where this market might turn. So we've got our 4-hour chart here. We've got our 1-hour chart down the middle here with some more milestones to look after us. And then finally our 15-minute chart as we're getting up close and personal to this trade, giving us another milestone to look at. Once we have all that in place, here's our 1-hour chart. And like I said, we were trying to get in intraday to lessen the risk value. And we will be looking at this trade as it happens. I'm going to talk you through what our students were looking at. We're looking to enter here. Let's have a look at it live. So here's our market now approaching the low. We've got some down bars. The students would be at ready. They've got their window. Here's our low coming in here. We have an up bar. We've got a signal bar, then an up bar, then a down bar. So we will look to get in at the breaking of this small green bar here, and our stop loss would go underneath, one tick below it there. That gave us a risk of 17 ticks. Now, as a profit target, we like to look for a 10-to-1 reward to risk ratio trade. So obviously 17 ticks would give us 170 ticks reward, which would take us up to 117.63. So our stop loss would be put in as we enter. Once we've worked out our risk, we can then add in our profit target to that trade at 170 ticks above here. This was Thursday evening, quite late into the evening, but a lot of our students were up and prepared. Okay, as we can see, the low came into our window, and here's the market making its way up. We're currently in Tuesday of the next week, and we've climbed quite a way. I would say at once some of our students have got a 5-to-1 reward to risk ratio. They would then bring their stop loss up from here to our entry point, so they're at break even, and now there's no risk on the trade. We just miss out there. That's when I moved my stop, because I thought maybe we're just going to fall short of our 10-to-1 profit target there. And then as you can see, if I just stop it here, on the Wednesday, late into Wednesday evening, okay, early hours of Thursday morning the following week, we hit our profit target of 117.63. The market keeps going. That's fine. We like to leave $1 in for the next guy. But we've got our 10-to-1 reward to risk ratio, which we're happy with. I have to say at this point, I had my personal stop loss underneath the turn down here. That was just me being extra safe. Okay, but I know a lot of students had their stop loss under the bar there with just the 17 points risk. So I wouldn't have taken the full 10-to-1 reward to risk, because my risk would have been a bit lower. Okay, but most people had that 17 tick risk and the 170 point reward to risk ratio for their trade. And like I said, the market carried on upwards, so I did fine. Thank you very much. We'll head back inside. Okay, and that was our setup. That was how we played out. Everyone leaving the market nice and happy around this point. And that was our euro trade. 17 points, 170 points of reward, a 10-to-1 reward to risk ratio, which is what we look for. If we use our account of $5,000, that risk would be $250. So then the reward would be $2,500. That took just under a week, 4 trading days. Okay, but obviously a lot of work went into that trade prior to us taking it. There were weeks of stalking and analysis and working out where we thought the trade might take place, and that meant we were prepared and ready to get in and get out and take our reward for all that work. Fantastic. So if you'd like to learn how you can do the same, follow the link below to find out more about the Active Trader program, the course that will teach you how to take the trade that I took, the students took on the euro, and got out within a week. See you very soon, guys. Thank you, and we'll show you your August trade.